Good morning, Chris Vernon with Vernon Litigation Group. Today I want to talk about the securities industry, as I often do, but I specifically want to take a minute to discuss a shift in the securities industry that we're just starting to see that I think is really going to help what I call the middle class retail investor, and I think it's also going to help the ultra high net worth investor. And the shift regards fees. Fees typically are charged, especially at the high end level, as a percentage of assets. And Schwab recently introduced its robo-advisor concept, wherein they're going to charge a very small fee to manage your money. And on the high end, I know some friends who manage money on the high end who are moving to a flat fee, which is going to be significantly less than the typical 1% or the range of 1% charged by a lot of high-end financial firms. And this percentage charge has prohibited a number of what I call middle class or retail investors from actually getting good portfolio management. And on the high end, arguably, it's led to overcharging some of the high net worth families. So I think this change is very good. I think it's going to bring down the cost. And I think part of this obviously is driven by artificial intelligence and the ability of some of the portfolio management to be done by artificial intelligence. So I think this is good news for investors, and I think if you're thinking about using a portfolio manager, no matter what your net worth, I think you should start to ask these types of questions. How do you charge? What are your costs? Are there alternatives? And begin to inquire and help drive the cost of portfolio management down. Let's remember, whatever it is, make sure your money's working for you and not for somebody else.